All right, today we are back with Gareth Soloway with In the Money Stocks. Gareth, thanks for taking some time out to join us today.
Always a pleasure to be with you, Greg.
Today, especially, we have some exciting price action finally in Bitcoin. Last couple of times we talked, we were kind of stuck in the rut. Ethereum is on the move. So I think we have a lot to talk about today.
Yeah, we do. It certainly is a potentially very interesting situation here on Bitcoin. Bitcoin has now gone above this key trend line. So again, just to rehash, we had the big drop from, basically 65,000, the all-time highs, down to 30,000, and then we've basically been range trading for the last 3-4 months, right? And today you can see it's starting to move above. Now the one thing I would just caution people about here is that a move above is good, but it doesn't confirm a breakout, right? So generally what I want to see is I want to see in the next trading day or so a secondary close higher than the high of today's candle. So today's high right now is at 43,280. So I'd like to see a close back above that in the next couple days before it closes back below the lines. Now you might think, that seems like so complicated. Why do we have to do that? Well, the bottom line is the institutions are playing with Bitcoin investors, right? We saw it on the way down. Over here, you pierced it. Everyone thought it was breaking down. And then what do? They ripped it right back up. Over here, we closed a day below 30,000, just like we might close above this trend line today. What do? They ripped it all the way back up. So generally, I go on the more cautious side and say it's a promising potential breakout here, but let's see if it confirms so we really know for sure. Now, if it confirms, you likely head up to this gap fill here, which is right around, let me give you an exact, right around 49,500. Maybe it touches 50,000. That would be your next resistance point on the chart.
So I know several people are calling for a bull trap all the way up to 50,000. So do you think if we get up to that point, we're okay and we're off to the races? Or do you think we need to confirm above 50 before you feel like the trend has reversed?
Yeah, I'm kind of in the camp of a potential bull trap, and I hate to be like that because long term I'm very, very bullish on Bitcoin. But I do think that there's whenever you get gaps in the chart, there's this kind of almost magnetic draw to fill those gaps. And there's a big gap here, right? From here to here. And that ultimately should lead to Bitcoin moving back up here a little bit back to that level. Once it gets there, that's your next resistance point. Now, if it gets above there, then I do think we test, if it really establishes itself above 50,000 for multiple days in a row, then I do think you have a shot at the all-time highs. But right now I'm in the camp that if you do break here, you go to that 48, 50,000 level, then likely you'll see a deleveraging event in the markets that will influence Bitcoin and cause deleveraging in Bitcoin and cryptos. And you'll see it flush down to, hate to say it, but 18 to 20,000 area. If you ask me where Bitcoin is in 10 years, probably 100,000 or more. But you have to see these drawdowns. You have to flush out the money. I know people think that the move down to 30,000 was a flush out. It honestly didn't flush it out to the point where, if you look at the market, the stock market in 2009 at the lows, I mean, there was literally people just giving up on looking at their portfolios. It was so nasty. You haven't gotten to that point on Bitcoin. And I think it's important to remember that on a normal basis, Bitcoin corrects 85% very regularly. I mean, if you look historically at Bitcoin. And so you have to expect that, 85% would actually put it a lot lower than 20,000. But I think, again, the 18 to 20,000 would be a likely target before it starts really just charging higher to those higher levels.
Yeah, I'd have to agree with that. I know a lot of people personally that have been waiting to get back into the 40,000 plus range to sell that would not sell at 30. They were like, well, if it's down here, I'm just going to ride it down and back up. But if it gets back above 40, I'm selling. That maybe they were in at 30 to 50 and they want to get out in that 30 to 50 range, but they didn't, but they would ride it out below 30, which was interesting. And that didn't get tested. So we don't know how low ultimately they would have ridden that down. Now, here's another question. We do know the institutions are involved. I've been showing a lot of price action lately on videos I'm making where Bitcoin, Ethereum, until lately, and several of the large caps look identical. I'm talking exact price action, same moves, same amounts on the same days at the same times across like 20 or 30 different assets, probably more if you dig into it. So here's the question. With the institutions involved at the level they're involved now, will they allow it to go below 30,000 and can it go below 30,000? Is that their floor?
Yeah, that's a great question. So the ones that are getting involved probably don't want it to go lower than that if they're buying in this range. The question I would have is that, if you look back in previous periods of major deleveraging, whether it's 2008 and 9 or 99, 2000, 2001. Did the institutions get what they wanted? Oftentimes you could say that, especially like look at the bank stocks in 2008 and 2009. I mean, you had some of these stocks trading at $3 in these big banks per share, like Bank of America. And I would dare say that, the deleveraging event will even influence or affect them to the point where it'll probably drive it lower. And that could actually be a negative for Bitcoin, where if you start to get these key breaks on the technical side, it actually could create institutional selling where they're saying, okay, listen, this is going to go down to 20 or 18 or wherever. We need to unload at 28 or 29. And that could actually be a catalyst to the downside. So I would say in general, the institutions, they are smarter than average investors. They can kind of ignore emotion more, but they still have levels of risk tolerance that they have to abide by, right?
Yeah, yeah, exactly. And we are seeing, some of them dip their toes in. We know that we're still probably a year or more away from really broad scale institutional adoption because of the regulatory environment and other issues of compliance that they have to navigate internally. What do you think ETFs and more broad scale institutional involvement does to the price action? Is that exponentially, exponential growth there, or do you think there's a limit to the upside? What do you see that doing to it?
I mean, I do think that when you really get full adoption by, if you think about the amount of money pension funds hold and institutions across various hedge funds and just on books of corporations and stuff. I mean, if you really got to that point, Bitcoin is likely at 500,000. Now, again, I don't think that that's going to happen in the near term. It's slowly happening. But, until you get, and it's just kind of counterintuitive, but everyone's always like, oh, the regulation is going to be so bad for Bitcoin and everything. I'm in the opposite camp. If you look at other asset classes, if you want the big money to get in, you need to have regulations. You need to have rules so that they know what to follow. Think about marijuana stocks, right? So, marijuana stocks, for the most part, federally not legal. So a lot of institutions aren't able to get involved, and banks can't get involved in them in a lot of ways as well. And that really is holding those stocks back. So I think regulation is a good thing longer term. It's scary initially because you don't know, how much is the government going to regulate? We always hear regulation being such a negative thing. But if you want adoption of Bitcoin, you need to have standardized rules that institutions and trillion-dollar pension funds can hold on to.
Yeah, they can't even get involved until that's instituted and we have regulations and we have laws. And for everybody watching, one thing to remember is there's a lot of things on the table right now because they want to get it going. And it's kind of like Palo Alto, right? Go fast, break things. Legislation can be the same way. There's a lot of risk for individuals in this environment right now. It's an emerging technology. It's a new investment vehicle. There's a lot of assets being promoted that are really securities. They really are, and they're not being regulated at all. So they want to get in from a consumer protection standpoint. I know a lot of people don't agree with that, don't believe it or whatever, but one of the things to look at is opportunity zone legislation. So the new Tax Jobs Act, where they had the opportunity zone legislation where you could shelter a capital gain, was the same way. They put this thing into effect, and there were a lot of questions about it and a lot of issues that didn't line up, unintended consequences of good, intentions. So even if a bill gets passed and there's things in there that are prohibitive and unintended consequences of good intentions, they will clear that up, put forward guidance, and then they'll change those things. So I know there's a lot of people saying, well, all I am is a miner, and if I have to adhere to all this stuff, it's going to kill my business. Well, they will make exclusions and exceptions for people in those industries once it's passed and people start lobbying and they see the hurdles that it's creating that are not what they really intended. So once they pass it, what I'm saying is once they pass something, that's not what you're stuck with forever and ever more. They will amend it, they will make exceptions, and they will get more reasonable about it as it goes along.
And you're 100% right on that in regards to, so ever since China cracked down on mining and so forth in China, Texas has become an absolute huge spot for it, right? So now all of a sudden you're going to have Texas lobbying to make sure that, the crackdown and the rules aren't too stringent. So, you do want rules and regulations, but like you're saying, is there will be a back and forth to make sure that it still can be a part going forward. And that's really what you want.
Yeah, and the federal government, number one, they just want to tax it. Number two, they want to make sure that there's, not illegal securities and securities laws being violated. There's exemptions for that. So that's just paperwork. And securities attorneys will add this to their offering. So all you'll have to do if you're out there and you're an operator, you're creating a project, you're doing whatever, all you got to do is contact a securities attorney once this stuff happens. There'll be some paperwork, might cost some money, but that's really all it's going to boil down to.
Yeah, yeah, and it wouldn't shock me if the SEC is waiting to approve an ETF until there's at least some framework there too, just to kind of cover themselves, so that the worst thing. Imagine if the SEC, and granted the likelihood of this is 1 in a million, but SEC approves an ETF and then the government comes out and basically crushes crypto. I mean, the SEC doesn't want to have that situation, even if it's a 1 in a million chance on their hands.
Yeah. So here's the soundbite of the day: regulation is bullish for Bitcoin.
Yeah, it is, absolutely.
All right. So what else do you have that you've been watching? I know we talked about Ethereum and the general markets at scale. So what else are you looking at?
Well, I know a lot of people are always asking about, hey, can you do analysis on Ether? And so, yeah, let's take a look at the Ether chart. And this chart's kind of interesting because it's a little different than Bitcoin. It's had a much stronger run to the upside, but interestingly enough, it's actually coming into resistance here. So if you look at this kind of channel almost that you've got on this, while Bitcoin is breaking above its line here, Ether is actually just coming into these little pivot tops right here. So what this could tell me is that you might see you have a little bit of an overbought scenario on Ether. It might have a small consolidation digestion period here where it goes sideways or maybe pulls back just a little bit. And it's possible that because of that, maybe money comes into Bitcoin. Now, again, we haven't confirmed a bit breakout yet on Bitcoin, but it is something that I'm kind of watching here over the next 24 to 48 hours. So again, Ether, great move. It's diverged from Bitcoin in terms of its strength, but please be aware that you are into a short-term resistance level here around 28.75 or so.
Okay. What about general markets? Anything you have your eye on there that we need to be aware of that we know that they are all correlated now and money's going in and out of each of them?
Yeah, they sure are correlated. So take a look at this, guys. This is such a cool chart, right? So this is the S&P 500 ETF, the SPY, and look at this channel. And I think the last time I was on, I had this same channel on with you, Greg, and it's just been slowly, these two lines are slowly converging, and we're basically at a point where you're now, within probably a week of either a big move to the downside, a breakdown to the downside, or breakout to the upside. And what we were talking about on Bitcoin, how you need a close above that level on Bitcoin. Let me put that up again so we can refresh our memory. So remember how you closed below here and they ripped it back up, and then you closed above here. And I really want to see a secondary bigger close to really confirm it. Well, if you go to the spiders chart, that's basically what we've had twice. So they've closed it below this trend line once, and then what do? They ripped it up, closed it below again, ripped it up. And now what I'm looking for again is ultimately, which way do we break? And then my guess is it'll be to the downside. And then do we get that 2 consecutive lower closes that confirms a bigger breakdown? And I think if we get that, you're looking at, again, 10% correction at minimum. These corrections here have been about 3%. It's just over and over again, 3% corrections. At some point, you're going to get something bigger. Does it kind of coincide with the Federal Reserve tapering, right? We know that the Federal Reserve has said now, you had President Waller on CNBC just last week, I think it was, and he said that if the jobs number for the next 2 months is 800 to 1 million, then you'll get them to taper in September. Well, we got our first number above 800,000 today at 943,000 on the jobs number. So that could be something that the markets start to get nervous about, and could be one of the reasons, if we look for reasons, why you could break down here. But fascinating how this triangle pattern, these two lines are just converging, and really remarkable how the market has stayed within them as much as it has.
Yeah. And what we have to expect moving forward is tapering to happen, because the job situation is only going to get better with the unemployment benefits expiring here soon. What is that? The end of September, I think they expire.
Yeah.
And it's not going to be extended unless the Delta variant is out there at scale and we're shutting things back down again. Like, I don't expect lockdowns again, but there could be some restrictions for indoor dining and hotel travel, airlines, things like that. So if Delta affects those things by the end of September, you could potentially see that getting extended again, but the likelihood of that happening right now are slim. So we have to expect some tapering to start taking place.
Yeah, I agree 100%. And honestly, it's healthy, right? I mean, what the Fed has done here to me is just mind boggling. Maybe they're smarter than me. They probably are. But to, supposedly that 120 billion a month of bond buying that they were doing, that was like an emergency measure because of COVID last March and so forth. And here we have GDP at 6% or greater. I mean, the economy is roaring and they're still doing it. And it's like, they need some bullets in that gun for the next crisis. And if you kind of waste them all here, that's where you get in a situation where you just have cataclysmic impacts later on. So I hope that they do taper, because I think they do have to start preparing for the next issue, which could be a year, 2 years, 5 years away.
Yeah, the unintended consequences of good intentions, right? So
Yeah.
record all-time highs in all markets, all across the board, every asset, with the exception of one or two in the commodity sector, but generally the markets, real estate, crypto, financial markets. I mean, everything is at record highs. I mean, I know crypto has corrected a little bit, but going back, we're still at record highs going back, when you look at how much, these things have gone up in the
And the
last year or
Fed,
so.
and I think it's important, the Fed keeps saying, oh, the inflation is going to be transitory. Although I will say that, lately they've been throwing little question marks in there, like they're not even sure. I've been saying all along it's not fully transitory. But like, look at the wage pressures going on. You can't, these restaurants, these places, they're having to pay, $20 an hour all of a sudden from where they were paying $10 or $12 an hour. That the wages are the biggest input cost to really any business, right? So if you have that kind of jump, they may not push those higher prices through right away, but my guess is they're going to have to raise prices over a longer period to offset those higher wage pressures, and that's going to create longer term inflation. I don't think it's going to be 8% or 10% inflation a year, but I do think you're talking well above 2%, which is what the Fed says that they want, right?
Yeah, we're definitely facing some of it's transitory through the reopening and the cost of reopening. But yeah, I mean, a lot of it is up. It's not coming down. And, the real issue is the stagflation. And, I think they're now starting to, they don't want to talk about it, but they're starting to hint at it a little bit, which is where you have inflation, low growth, and high unemployment all hitting at the same time. So we'll just have to see how the employment numbers shake out and where we're at. We know inflation's here to stay at some level, but the real question is, are we going to see stagflation? Which, that's the worst of all case scenarios there.
That is the worst. And one thing, you were just mentioning unintended consequences before, and it's so interesting to think about that, because what the Fed kind of expanded its mandate, right, to include, jobs and things besides just inflation. And so they're like, okay, well, we don't have enough jobs back, so we're going to keep interest rates super low. We're going to keep on bond buying and just flooding the economy with lots of money. Well, the unintended consequence of that is that now you get inflation where, I mean, I'm sure you've been to the store, Greg, and you see the prices and everything like that going up and up and up, and car prices and this and that. And it's like, okay, well, you wanted to help those people that were having trouble finding jobs, the middle income, the lower income brackets. But if you have now inflation and all those prices are going up, 5-10% for a few years, you've actually just unintendedly hurt them, because now those are the people that can't afford higher prices versus me, or I'm assuming you. If the price of an apple goes up 20%, not a huge deal for me, but for lower income, it is a huge deal.
And gasoline. I mean, $3 gas, that doesn't, that's not going to change our lifestyle, but for a lot of people, that's a big lifestyle change, because it was $2, what, 6 months ago, 8 months ago?
Yeah.
Yeah, that's huge. And so, yeah, those things are definitely putting a dent in the pocketbook. I mean, I do the grocery shopping and I go pretty much every day and just get whatever we need. It's just, we don't consume a lot in that regard. So I'm very sensitive to prices in terms of watching them, because I find it fascinating. And I mean, you can't just for a short trip at the grocery store for two people, basically, and, some college age kids coming and going, it's $100 every day almost, just for little things.
Yeah, isn't that amazing? I mean, and again, you put yourself in the position of thinking about some people that are making, 40 or 50,000 a year, even, which, some people make less, but that's got to be hard. I mean, even, thank goodness the wages are going up now, but man, oh man, that's tough.
Yeah, we needed some wage increase, because the biggest issue out there that not a lot of people are talking about is rent to income ratios for people that are renting. If you're buying, that's great, record low interest rates. So that's keeping mortgage payments down. So in that regard, even though we're maximum all-time highs in real estate from an affordability standpoint, we're still pretty good, on a debt to income ratio. But from a rental standpoint, it's the total opposite.
And again, just going back to the unintended consequences, like, so the Fed keeps interest rates super, super low for such an extended time. Well, what does that do? It creates this massive bubble or increase in prices in housing. So the question is the consumer that's buying a house really benefiting, right? If, because I mean, let's say interest rates were at 3% or 4% on the 10-year, would housing prices be 10 or 15% lower than they are? And is it just a matter of where their dollars are going? It's either going to your bank or it's going to the person who's selling you the house. I don't know.
Yeah.
But,
Well, one more little thing to take a look at that I always find interesting that blows everybody away is on your chart for Bitcoin. If you type in moon phases, I think we talked about that one time before. Have you looked at this?
I don't know if I have. So can you
Okay.
explain?
Yeah, pull it up and you'll see what I'm talking about. Now, I'm not an astrologer. I don't follow this. I saw somebody talking about it, technical analysis, and I'm like, man, that's really fascinating. But if you pull up the moon phases, it'll show you the moons, over Bitcoin's history. And for every full moon, the price pumps, and every new moon, the price dumps. So we got a new moon coming up Sunday, August the 8th. And we just came off the full moon, and this pump was right at the full moon.
Oh, super
Yeah,
interesting.
you should take a look at it and look at those cycles on the chart.
All right. It's something I can pull up on Google or just on
Trading View. Yeah, whatever you're using in your chart.
I have
So it's an
TradeStation.
indicator. So if you go to the indicators in your chart and just type in moon phase, you'll see it actually add to your chart.
Oh, okay. I'm not sure how to do that on TradeStation. Let me show my chart and see if you can walk me through this here. All right. So where do I type it in up here?
Just wherever you would do an indicator for like EMAs or whatever type of indicators you use, and just type moon phase. If you're searching for a EMA or any other type of indicator.
Yeah, I'm not seeing. It doesn't look letting me type in here.
All right. Well, let me do this.
I'll have to go back to the manual and find out how to do that. But that sounds fascinating.
Let me share mine here real quick. And so I'm on Trading View. Can you see this?
Let me see. I can't see it yet.
Yeah, it's showing on my end.
Okay, got it now. There we go.
You see me?
I see your screen.
Okay. Oh, I got to go to the daily. Here we go. Okay, there it is. So they have the colors backwards. So the top moons, the white moons, are actually the new moons, and the bottom moons are actually the full moons.
Gotcha.
So
that's super cool.
Yeah. So if you look at that, and if you can find out how to put it on your chart, it's just something funny to watch. Like I said, I don't use this. I don't understand it. I'm not an astrologer, but when you look at the history of the moon phases on Bitcoin, it's pretty amazing. Even in the bull markets, how the price pumps and dumps on these moons. And then if you look at recently where we just came from, we had the big dump from, 50,000, 59,000 down on that new moon. And then we, pump back up a little bit. And then we've just been kind of pumping and dumping with the moons. And we're on the pump right now. And then we've got, on Sunday, we've got the new moon printing, which should be a dump moon.
Wow. That is actually really cool. Listen, I come on these things and you never know when I'll find something new. So
hey, I'm not saying it's new or it's anything like that. A lot of people in crypto space, are watching that just because it's kind of interesting. And there is one person out there that there are a lot of people that trade astrology, use it for trading and in the traditional markets as well, because it's all human behavior, right? And human psychology. We know moons, ERs are busier on full moon nights and all that kind of stuff. But to see it that specific on the Bitcoin chart is just, it's just so coincidental. It's almost too coincidental.
It is the way it looks. It absolutely is. And you're 100% right on that. Is that, I've said this before, is that for my cycle work on market cycles, I do use lunar and solar cycles as well as other things. And you'd be amazed at how many times you can pinpoint a market dump or a market pop based on the lunar and solar cycles or major events. And people are always like, oh, that's, astrology, this and that, what do you believe in? Like all these, you're going to have a great day. You're going to meet something. It's not about that. It's understanding that like the moon itself controls the tides of the ocean, right? And the water, the surface of the earth is covered by 70% water or something like that. So if the moon can control that much water, and we're made up as human beings of 80% water, think about just the impact that it can have on us. So, I mean, there is something to that. And I appreciate you bringing that up.
Yeah, absolutely. Any final thoughts as we go into the weekend? As you know, Bitcoin's 24/7. It's going to trade all weekend. Anything anybody should do, shouldn't do? Any advice for the weekend?
Well, let's see if we confirm this breakout. And then if you do, your short-term bias would be bullish to about the 48 to 50,000 range. If it doesn't confirm, then it could just go back to trading in that range. And it'll be interesting with that lunar cycle that you were mentioning as well, just to keep an eye on that, see if that does play an impact. Other than that, I think this market over the next week, basically that chart of that triangle converging, you're going to have something happen over the next week and a half or so. So maybe we'll pick this up in a couple weeks and revisit if something does happen and we can talk about it. But something's coming here based on that chart, and just be ready. I don't know what it is. I'm not going to pretend to have a magic 8-ball or a crystal ball, but something's coming.
Absolutely. Well, Gareth, the weekend's coming, and I wish you a very happy weekend. Thank you for taking time out today. I know you're super busy.
Thank you so much for having me. It's always a pleasure.